BlackRock, the most powerful asset manager in the world with a $10 trillion portfolio, has just filed for a Bitcoin ETF. Hi, my name is Edward with Because Bitcoin, your number one source for crypto news. Like and subscribe because things just got insane. BlackRock is silently taking over the Bitcoin space. Currently, we have Bitcoin future ETFs, but there's no real Bitcoin being traded. There are just pieces of paper that track the future price of Bitcoin. But what BlackRock is doing here is a lot different. BlackRock is applying for a tool spot ETF where actual Bitcoin will be traded, although it will be held by a custodian. More on that later. Watch what they do, not what they say. You must be careful with these companies. In 2017, BlackRock CEO Larry Fink called Bitcoin an index of money laundering.
Is it true that you're building out a cryptocurrency capability?
No. I mean, we're looking at it. We're looking at blockchain technologies, and we're looking at all the crypto.
Blockchain isn't crypto. Blockchain is just the underlying technology. Well, don't your clients want crypto exposure?
No, I don't believe any client has sought out crypto exposure.
Really?
Yes.
But at some point they might. Do you need to be prepared?
I don't, at the moment, no. I have not heard from any one client they're looking to buy a cryptocurrency at this time. But right now, I can tell you, worldwide, I have not heard from one client who said, I need to be in this.
And then in 2021, BlackRock was bullish on blockchain, but not Bitcoin.
I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement.
And then in 2022, BlackRock picked Coinbase to provide clients with direct Bitcoin exposure. By the way, this isn't the first time Larry Fink has now sided with crypto. He has been getting more vocal throughout the years.
This is one of the reasons why I'm focusing on the whole idea of blockchain for securities. I look forward to the day when we could tokenize stocks and bonds, that every stock and every bond we could identify immediately who is the beneficial owner. And this is why we're working on it. And every beneficial owner, from an individual to an institution, have the ability to vote, to democratize every single vote. And that's where we want to take this, and we're leading that effort.
What's interesting is while BlackRock invested in crypto, Larry Fink's friends would say otherwise. They would sell fear, uncertainty, and doubt into the minds of the public. Hillary Clinton is a prime example of this.
And then one more area that I hope nation states start paying greater attention to is the rise of cryptocurrency, because what looks like a very interesting and somewhat exotic effort to literally mine new coins in order to trade with them has the potential for undermining currencies, for undermining the role of the dollar as the reserve currency, for destabilizing nations, perhaps starting with small ones, but going much larger.
iShares, the behemoth unit of BlackRock, has made a bold move. On June 15th, late Thursday afternoon, papers were filed with the U.S. Securities and Exchange Commission, laying the groundwork for the formation of a new kind of investment vehicle, a spot Bitcoin ETF. To be officially named as the iShares Bitcoin Trust, this fund's assets are set to consist primarily of Bitcoin held by a custodian on behalf of the trust. And who is this custodian, you may ask? None other than the titan of the crypto world, Coinbase. That's right, the same exchange being sued by the SEC right now. CEO of Coinbase, Brian Armstrong, believes there has never been a clear interpretation of the law. Therefore, the exchange is in compliance.
The question really is, are you breaking the law? And is what you are trading a security? What's your interpretation of the law?
Basically, we're in this environment of, regulation by enforcement. I don't feel like there's a clear rule book. The only sort of high-level statements they've made is that everything other than Bitcoin is a security, which that's just not what it says in the law. And by the way, that would also kind of mean like the end of the crypto industry in the US if that was actually the what happened. And so we have to go to court to challenge that. We're proud to do it for the industry and for America. But Coinbase has reviewed well over 1,000 different assets. 90% of them we've rejected. The 10% or less of assets that we've reviewed that we did decide to list, we feel that those are crypto commodities. And so they don't need to be registered and traded with under an SEC license.
While the SEC has approved a number of future-based Bitcoin ETFs, it has notably rejected those from Grayscale, Van Eck, and WisdomTree. But BlackRock may not be so easy to turn away. With more than 10 trillion in assets under management, BlackRock wields a power that could rival the SEC itself. The face-off between BlackRock's CEO Larry Fink and SEC leader Gary Gensler could redefine the landscape of cryptocurrencies. However, not everyone in crypto is jumping for joy. Many in the crypto world feel that the Wall Street's involvement goes against the very ethos of Bitcoin and crypto in general. The idea of decentralization, the idea of freedom from traditional finance institutions. Many argue that BlackRock's move could pave the way for increased regulations, more specifically, manipulation. People like Wendy O have expressed their concerns on Twitter, stating, "The BlackRock BTC Spot ETF is not bullish in any aspect. They are monopolizing the industry in the USA so they can destroy crypto, further the wealth gap, and make you submit to their CBDC. Do not be fooled."
As you all know, the SEC has unjustly gone after Coinbase, Binance, and many other crypto asset providers. We all know that BlackRock and Vanguard own a majority of American companies in the US and on a global scale. It is absolutely ridiculous. But in Q1 of 2023, it is public knowledge that BlackRock, Bank of America, and Fidelity have started to publicly move into the crypto asset industry. For the record, BlackRock owns approximately $8 trillion of assets globally, and they just submitted an application for a Bitcoin ETF.
Miles Dutcher on Twitter also made a pretty compelling argument about the situation. He states, "The SEC is killing crypto so they can control crypto. 1. Cut the on and off ramps to starve ecosystems of liquidity. 2. Create a dubious regulatory environment to deter new startups from entering the space. 3. Purposely deny regulatory licenses to crypto businesses and take legal action against them. 4. Pave the way for TradFi institutions to take over the space by granting them the appropriate approval. For example, BlackRock." In the wake of this news, the crypto markets has seen a glimmer of hope. Bitcoin's price rose just shy of $25,600. But this move comes at a turbulent time. The crypto industry is still reeling from the recent US regulatory crackdown. Could this step by a financial titan provide the stability it needs? Or will it only add to the uncertainty, leading to a devastating downfall? As BlackRock steps into the crypto stage, we are reminded that Bitcoin continues to captivate some of the world's largest financial institutions. As we stand on the precipice of this new era, one thing is certain: the world of finance is changing, and it's changing fast. Stay tuned as we continue to bring you the latest development in this captivating saga. And as always, like and follow for more crypto news here at Because Bitcoin. Be sure to go check out becausebitcoin.com for all things cryptocurrency related news. Every day there are new updates on the cryptocurrency markets, as well as our premium reports over at becausebitcoin.com/premium. These are curated by our seasoned analysts for you to stay informed and make informed financial decisions. That is becausebitcoin.com/premium.